If you're holding crypto right now, you need to pay attention because the SEC just made something very clear, and almost nobody understands what it really means. This isn't just news, this isn't just regulation. This could decide which coins survive and which ones disappear. And if you're not prepared for this shift, you could be holding the wrong assets at the worst possible time. If you hold crypto, the SEC just made something very clear, and most people still don't understand what it means. This is not just another headline. This is not just another regulation update. This is a signal that the rules of the game are changing. And if you're holding crypto right now, this directly affects you. But to understand what's really happening, you need to look beyond the surface. Because most people see regulation as a threat. They think government is coming, crypto will be restricted. This is bad for the market. But that's only one side of the story. The reality is more complicated and more important. Because what the SEC is doing right now isn't just about control. It's about defining the future of crypto. And whether you like it or not, that future is already taking shape. Let's break it down. For years, crypto existed in a gray area. No clear rules, no clear classifications, no clear boundaries. Projects launched freely. Tokens were created overnight. And billions of dollars moved without oversight. For some people, that felt like freedom. For others, it looked like chaos. And that's exactly what regulators saw. Not innovation, but risk. Not opportunity, but lack of protection. So now they're stepping in, not to destroy crypto, but to define it. And this is where things get serious. Because once rules are defined, everything changes. The biggest shift happening right now is classification. The SEC is trying to answer one question. What exactly is crypto? Is it a currency? Is it a commodity? Or is it a security? And that distinction matters more than most people realize. Because if something is classified as a security, it falls under strict regulations. That means more rules, more oversight, more compliance. And many crypto projects are not prepared for that. So what happens next? Some projects will adapt, some will struggle, and many will disappear. This is the part nobody talks about. Because while regulation brings clarity, it also brings consequences. Weak projects won't survive. Overhyped tokens will fade away, and only the strongest networks will remain. Now think about that. For years, the crypto market has been flooded with noise. Thousands of coins, endless promises, hype-driven cycles. But what happens when regulation filters all of that? You get consolidation, you get focus, you get fewer but stronger players. And that's not necessarily a bad thing. In fact, historically, this is how markets mature. Look at the internet. In the early days, there were countless companies. Most of them disappeared. But the ones that survived, they became giants. The same pattern is starting to appear in crypto, and this is where Bitcoin stands out. Because Bitcoin is different. It doesn't have a company behind it. It doesn't have a CEO. It wasn't launched through fundraising. It operates as a decentralized network, and that makes it much harder to regulate in the same way. This is why many experts believe Bitcoin is more likely to be treated as a commodity rather than a security. And that distinction matters, because commodities are regulated differently. They are seen more as assets than as financial contracts. So while many crypto projects face uncertainty, Bitcoin sits in a stronger position. But here's where things get interesting. Regulation doesn't just remove risk, it also creates opportunity. Because once rules are clear, big players feel safer entering the market. Institutions, banks, investment funds. These players don't move in uncertainty. They wait for clarity, and that clarity is starting to form. So while retail investors are worried, institutions are watching, preparing, positioning. And this is where most people get it wrong. They think regulation will kill crypto. But in reality, It might legitimize it. It might open the door for massive capital to enter the space. But there's a catch. That capital won't go everywhere. It will flow into assets that are clear, compliant, and trusted, which means not every crypto will benefit. This is why understanding this moment is so important, because we are entering a phase of selection, a phase where the market becomes more serious, more structured, more competitive. And if you're holding crypto, you need to ask yourself a question. Are you holding something strong enough to survive this shift? Or are you holding something that only exists because of hype? Because in an unregulated market, almost anything can survive. But in a regulated one, only the strongest remain. Now let's talk about fear, because fear is what drives most reactions. When people hear about the SEC, they panic. They think restrictions. They think shutdowns. They think loss. But fear often comes from misunderstanding. And right now, most people don't fully understand what's happening. This isn't the end of crypto. This is the transition phase, from chaos to structure, from speculation to legitimacy. And transitions are always uncomfortable, but they are also where the biggest opportunities exist. Because while most people are reacting emotionally, a small group is thinking strategically. They're not asking, is crypto dead? They're asking, which part of crypto survives and grows? That's a completely different mindset. And that mindset is what separates winners from everyone else. Because in every market shift, there are two types of people: those who panic and those who prepare. So where do you stand? Are you reacting to headlines or understanding the bigger picture? Because what the SEC just made clear is this: the free-for-all phase of crypto is ending, and a new phase is beginning. A phase where rules matter, where structure matters, where quality matters. And that changes everything. It changes how projects are built. It changes how investors think. It changes where money flows. And if you're paying attention, this is not just a warning, it's a roadmap of where the market is going next. So instead of fearing regulation, start understanding it. Because the people who adapt early are the ones who benefit the most. And the ones who ignore it, they get left behind. If you want to stay ahead in crypto, not just follow hype and headlines, then subscribe. Because the biggest moves don't happen when everything is obvious. They happen when things are changing. And right now, everything is changing.